Bitcoin and Ethereum began this week with what can best be described as waterfalling movements, but whomever has enough knowledge on Bitcoin, market cycles and technical analysis can calmly say, calm the fuck down. For sitting through these storms is what we call skin in the game. As of producing this episode, Bitcoin is down by 23% at most from its $58,000 local peak, and Ethereum is down by minus 33% from its $2,000 top. Regardless of where they will be at when you watch this, the purpose of this analysis is neither to fish for bottoms nor to speculate whether this was it, but rather to lay it out straight what's really going on, to get full perspective and clarity. In that sense, this technical episode is a bit different to the other ones on this channel. And as Bitcoin rules the wave, we'll stick to this crypto giant throughout this episode, as whatever Bitcoin does, Ethereum typically follows. And to be perfectly clear, nothing of this content applies to shitcoins, which make up for most altcoins out there. Most shitcoins will ultimately go to zero. Now, at first glance, this dump may look severe, however its worst damage so far simply takes us back to its previous all-time high from just 2 weeks ago, where it's rather funny how quickly people seem to forget. And to give some perspective, in just 1 month Bitcoin is still, and despite of this present price plummet, up by 55% up to its lowest point. That's 55% in a month after having peaked at more than 100% from its late January correction at $28,800 until its recent $58,300 peak. I see this often, also in rallying stocks. Something goes up by a lot, and once it corrects proportionately much, as expected from the laws of technical physics, people panic or get angry and shout loudly for a scapegoat to explain the, in their world, unreasonable price decrease.
Now you've done it! You've made me 1930s work whistle angry!
If we zoom out from the lower timeframes, does this really look horrifying to you? If it does, you're into the wrong investment, or else you need to properly do your homework on market cycle theory, technical analysis and Bitcoin before investing another dollar. And this I say in an attempt to help and guide you. It's of course entirely up to you what you end up doing. Now, this episode will not emphasize any further devastating and longevity damaging price drops at all, for the simple reason that we're early into a technically confirmed markup. But as you'll see in the upcoming Bitcoin series episode, that is by no means an antidote to severe volatility ahead, just like the one we're experiencing right now. For don't worry, there'll be plenty more unpleasantries ahead towards this cycle's ultimate markup peak, 6-figure all-time highs. And to whomever is interested in Bitcoin's 2021 price targets, please watch this episode. Now, to those of you who missed the boat and now hope for a second chance at 10 or 20,000, I say dream on, for it's not gonna happen, at least not throughout this markup. At best, you may see prices in the lower 30k range, but even that is bordering wishful thinking and should be deemed as highly unlikely at best. For what's really happening here is two things. First of all, when something doubles in value in just a month, a 20, 30 or even 40% correction is absolutely normal. Secondly, these moves are all designed, and I say designed with those recurring quotation marks of mine, to shake out weak players. We're talking rookies who are clueless of Bitcoin and how it behaves, clueless of how a market cycle works and let alone that of Bitcoin, and clueless of technical analysis. And to those of you who fall into this category, there is no shame in that, for we've all been beginners at some point. However, now you have all the more reasons to follow this channel to wisen up, and to wisen up quickly. For once this 12-year-long Oktoberfest of drunken jolly stocks feast euphoria is over, expect a significant increase in wiped out paper wealth, personal bankruptcies and suicides. But this is serious business, and if you're not prepared, then the upcoming hangover won't be merciful to you either. Just saying. And speaking of hangovers, please like and subscribe. And of course, not financial advice, I just speak my mind based on everything I've learned throughout the years. Now, let's move on to the technicals, and to be perfectly clear, those technicals are solely to calm your nerves that this is just another correction, gut-wrecking to the blind, and merely and barely interesting to those who've been around the block long enough to know the drill. For what we see now is nothing new, it's copy-paste all over. And on top of all this, a further reason why I'm so calm about this price dump is because I have a strategy that rewards and adds value during any of these corrections, to the point where I even look forward to them. And for a full disclosure of this strategy, please watch this episode. Here are some reasons not to panic, for the Bitcoin markup night is still young. Looking at the daily log chart, Bitcoin has barely begun to dig into its EMA ribbons, which it has respected on every previous occasion so far throughout this still short-lived markup. Just like it respected them throughout most of the 2017 markup, it still dipped below on no less than 3 occasions, all of which proved to be significant buy opportunities with immediate explosiveness and high risk to rewards, as in high reward and low risk. Neither do these sell-off volumes give any reasons for concern, for these volume candles are by no means a source of death and destruction, but rather a normal correctional reaction. Behaviorally speaking, throughout any markup, Bitcoin makes an impulse, corrects, makes another impulse, corrects, and continues like that until it reaches its distribution phase. The remarkable thing about these corrections is that they have historically never interfered with or crossed any previous all-time highs, not once. Neither throughout the 2 individual 2013 markups nor the 2017 one. This in itself goes on to show that Bitcoin's markup momentums are incredibly strong, especially since the last 2 have taken 3 and 3.5 years respectively of markdowns and accumulations to establish. And once that pressure is released, that pressure doesn't stop until the top. This in itself is not at all a rare technical phenomena. The latest one we've discussed on this channel is that of fingerprint cards, which now had its technical outbreak after 5 years of markdown and accumulation. Moving on. During Bitcoin's markups, it has a tendency of continuously testing its EMA 50 for support. Occasionally it breaks below, but it has never tested the underlying EMA 200 until well into the following markdown. Now, throughout 2017, the price tested the EMA 50 on every notable correction, whereas during the 2013 markups it didn't bother even once. The reason why I bring this up is because each markup has their own prerequisites, and although we may expect several more EMA 50 retests throughout this fresh markup, it's unclear with what frequency they should be anticipated throughout this 2021 markup version. This specific correction may or may not test the EMA 50 at around $41,000, but that's not the point here. The point is that if it were to test the EMA 50, then that on its own is a prime spot to scale for whomever has cash, and an ideal timing for myself to scale into Marathon Patent Group, as discussed in detail throughout the All-In Strategy episode. If, however, Bitcoin were to test the EMA 200 before this markup is over with, I will take it as a bad omen and of significantly weakened momentum. In this case, it would mean prices as low as 25 to 26,000, which on their own are highly unlikely, especially given the multiple strong support zones within the 30 to 38,000 range. I leave you now with these words. Don't be alarmed by sudden Bitcoin price plummets during this markup. These moves may look scary, but they don't bite, at least not yet, for this markup has literally just begun. We're less than 2 months into it, hence we can easily expect another 4 to 10 months of rising prices. And on that note, I was now given my first opportunity to enforce my 2021 all-in strategy. And what I've done is to release some Ethereum in favor for a full scaling into Marathon, in which I now hold 13% of my portfolio. And I already look forward to the next correction whenever it decides to show up. And in that sense, Bitcoin may bring on the battlefield, for I am ready. That was all for now. Thank you and goodbye.